Good morning. My
Good
name is
morning to you.
Stacey Mankoff. I am the managing principal of the Mankoff Company and founder of After the Bell Events, which, as you know, is on a bit of pause right now due to this pandemic. But we are hoping that we will be together soon in this new year of 2021. And today I am delighted to welcome Richard Crook to our Bellringer discussion on the dematerialization of private securities. Richard is the founder of Lab 577, which is a software company at the nexus of financial services and emerging technology. Prior to this, he was head of emerging technology at RBS, the Royal Bank of Scotland, and where he defined and led their emerging technology, which was quantum, blockchain, and AI strategies since November 2014. And Richard has an over 20-year experience and career in specializing in leading teams to shape and deliver maximum business benefits through technology solutions for the largest financial service institutions. And again, welcome, Richard.
It's good to be with you, Stacey.
Terrific. Now, to get this conversation started, I guess the first is, how do you define public versus private securities? And also, what do you mean by dematerialization?
So the different jurisdictions obviously have different definitions of these, but broadly, the public securities that you see being traded on an open exchange, they're listed. They may be equity or they could be debt, but you will see them on a daily basis. They're the Apple shares and the Tesla shares that people swear. There's nothing. I don't think anybody really misunderstands about what a public security is, but private securities are very much the tip of the public securities act as a sort of tip of the iceberg. Private securities are very much hidden from view underneath the surface. They are all of the debt and equity that's issued by companies, large and small, that you do not see. They are issued by those companies. They may have agents that assist them in both creating those securities and also placing those securities. But the majority of that private securities, be it equity or debt, is hidden from view. It isn't listed on exchanges, but it is a much larger size than the public securities market. Now, over the last 30 years, we have been dematerializing our public securities. You don't tend to see a certificate, a paper certificate of an Apple share. You don't get to see a BP share.
You mean the actual paper?
You don't actually get to see the paper. We've taken the paper and we've created an electronic record of it. And we've used a technology known as databases. It's been around for a while now. And from the sort of 80s all the way through the 90s, we pretty much dematerialized, as the wave that came through the securities industry is called, dematerialized those public securities. So they are now held in large centralized databases, usually close to the exchange that they are listed on. And as you and I may trade an Apple stock or a BP share, what's actually happening underneath the covers is the record in that database, the electronic record, is being updated. And those centralized records have now been in place, as I say, broadly for 20, 30 years, as we've slowly dematerialized those paper records, where we used to be shoveling them around and moving them around the certificates. We've now moved to these electronic. It's a very efficient way of dealing with it. Not so the private securities market. Private securities market, if you were to buy a share in Lab 577, would end up in your inbox as a PDF, or worse, as a printed certificate that I sent you in the mail. Now that private securities market is very much still records that are either held by the issuing banks or worse, certificates that are rolling around between individuals.
And obviously, there are the challenges when you're dealing with that as well.
So yeah, the challenges you're dealing with there is we spent quite a lot of time and effort and a huge sum of money over the last 20, 30 years on the public securities market,
right,
moving to these highly centralized bodies. But in doing so, we've created some large financial market infrastructure that is rather monopolistic in nature because it's got this centralizing action and a network effect. They then gained a level of pricing power, and that was all good when the banks found themselves with high profit margins. But as fees are now being squeezed, and as asset managers are also trying to reduce their fees being passed on to the end investor, that is pressing hard down on those pieces of financial market infrastructure. And the one thing we don't want to achieve is the same level of centralization of private securities. So in the private securities industry, one of the key features of it is it's decentralized. There is no single record in a jurisdiction of all of the private securities. And the regulators are recognizing that they don't really want to get to that situation. There are some benefits to centralizing it, but in doing so, they will create a lift of the fees as they centralize it into a monopolistic market infrastructure.
So I mean, and this all sounds well and good, but what are the challenges to adopting it? I mean, I don't, what are the objections that you would be getting?
So I think the first and foremost is you've got to understand the benefits of the public securities listing process. So the public securities that are listed have gone through a rigorous process to get them listed. But the cost of going through that process and the cost of ongoing achieving that listing and keeping that listing is extremely high. And that, I think, $2 million a year is the sort of rough estimate for holding a listing on a public securities exchange, which is an extremely high barrier of entry, which is why you don't see companies, until they gain to a certain level or need, move to get listed. On the private securities side, a company can issue its own debt and its own equity relatively cheaply. Further to that, the high cost of securitization, which used to be $500,000 to do a securitization, has now had a quantum shift in the cost. So the creation of securities, i.e. taking debt or equity and turning it into a security, is now a relatively cheap undertaking. And that means that we're now seeing an explosion of issuers who are assisting corporates in creating securities. So the number of private securities is now dramatically increasing. There is, and will continue to be, a need for quality. And I think that's one of the biggest challenges, which is it's very easy to create a security. It's very easy to issue your own equity and debt. It's a lot harder to convince investors that it is of an investor grade, or for them, relative term, but an investor grade for them to invest in. And I think that is where the private securities industry struggles to a greater or less extent. Much easier at scale. If I was to take an IBM bond, doesn't have to be listed on a public exchange. If someone came to me and issued that as a private security, as an investor, they come with a brand, they come with a capability. Much harder once you move down the size of companies and once you start moving into different. So that's first. The first and biggest challenge is quality.
And how do you what would you show investors? What are some of the necessary things you need to show them in order to get that confidence in it?
But the reason we are starting to see new issuers coming onto the market, when they're doing a securitization, when they're doing an issuance, the first and foremost thing they are doing is taking an asset that has got credibility, something that they can prove exists, prove that they own. And that's why you're seeing such interest in the real estate space. It's a property, it's a building, I can go and touch it. In the transport sector, aviation has had a long history of securitization of aircraft, and shipping is now starting to recognize that you can not only securitize the ship, you could actually securitize each and every container. So the shipping industry is also waking up to this. And I think that's where the quality challenge is solved when you are taking a high yielding asset, such as a transport, an aircraft, a ship, or a real estate building, which is highly visible, has an income attached to it, and thus gives investors what they are looking for in a security, which is a level of confidence that this security isn't just smoke, and also they're looking for an income from it, which they can recognize as peace.
Okay, and I'd like to wind up our talk to talk about how has this impacted the real economy, and how is are you seeing the market ready and expanding on this?
So I think the two parts to that is absolutely we are watching the financial markets, certainly the securities industry, start to recognize that the rules have started to change, the regulatory environment is changing, but also to decentralize, to stop this endless centralization action. Add to that what we are seeing in the corporate space, so step outside the little silo of financial services, the treasurers and the CFOs of the corporates are now realizing that they can do the securitization themselves. And they are the ones that own the balance sheet and the assets on the balance sheet. So it doesn't matter if you're a house builder or a factory owner, you have finished inventory that you can securitize and pass on to investors back into the financial services industry to then take to investors. And that really is impacting the real economy. And you're seeing that very much in the distributed ledger space, where in the distributed ledger space, they found a use case in trade finance, in looking at the supply chain. And in doing so, they've also discovered that they can securitize and start to reduce the working capital needs of that supply chain. So that's where you're seeing it really touching into things, where really touching into the real economy.
Right.
And I think from our side, from way of recap, that's really where you're seeing the real economy embedding finance into their space.
Well, thank you very much, Richard. I know this is just a taste of what is going on right now. As I said, we're hoping to be in real life in the autumn in London for a real panel discussion. And I thank you for today's talk. And I look forward to speaking with you again soon.
Tremendous. As I said, if anybody wishes to get hold of us, we're obviously available to talk about these themes, these evolutions going on inside the financial service market. It's what we do.
Terrific. Thank you so much, Richard. Bye-bye.